So this approval happened on 10th of Jan 2024. Over 10 ETFs have been sort of approved, and many more have sort of filed, which eventually might sort of get approved. The SEC was not taking a call on the Bitcoin ETFs since the last 10 years. So the first Bitcoin spot ETF was filed in 2013 by Grayscale, and it was not approved, citing certain reasons by SEC. And over time, SEC kept sort of rejecting Bitcoin ETFs. Then there was a court ruling in 2023 September, which basically mandated the SEC that by 10th of Jan, you have to take a call and you have to sort of give a decision on the spot ETF. So if you do not have any concrete reason to reject it, you will have to sort of approve the ETFs. So that is how it sort of came into being. The largest asset managers in the world, so the likes of Fidelity, BlackRock, and others have already sort of created that ETFs. And in the last 4 days, since it has sort of gone live, over $10 billion worth of trades in the ETFs have already sort of happened. Now, just to put that into context, the entire ETFs that have been launched in the US in 2023, their overall trade volume has been just like, say, $500 million a month and all, versus Bitcoin ETFs have sort of traded like up to $10 billion in that short of a time span. It's only been 4 days since it is sort of live. So overall, the appetite is pretty strong, and there is a lot of interest that is out there from individuals as well as institutions to sort of take exposure into this.
All right, so clearly a lot of interest and quite a buzz where we also, a spoiler also coming in from the governor who said that the party doesn't mean will be extending in India and for Indian crypto investors also. So how can Indian crypto investors look at these ETFs now? A lot's being said about the relief on the tax front that they might get, but looking at the cost structure, what would you advise? But just before that, explain us how big of an advantage it is from a tax angle.
So there are two ways to sort of take exposure into Bitcoin. You can essentially buy it from any exchange in India by depositing your INR and sort of buying those tokens. Alternatively, you can also take the LRS route. LRS is a liberalized remittance scheme where you can send up to $250,000 in a year and buy assets. So which is where you can sort of send this money to a US brokerage account, which would credit that money into your US brokerage account, and then you can take an exposure to the ETF. So certain apps sort of facilitate that, but in that case, you will typically have an exposure in the form of TCS. So any sort of movement of money that you're sort of doing above 7 lakhs, you will sort of have a 20% TCS on top of that, um, which is applicable on foreign remittances. So that is one of the challenges that is out there. At the same time, the positive is that you will sort of have your assets stored with a sort of financial institution which has repute and standing for the last sort of few decades. But the TCS angle sort of is the negative on the taxation side. Vis-a-vis, if you sort of trade it in Indian sort of destinations, Indian exchanges, you do not have any TCS angle. You basically sort of send it to an Indian bank account through which that is sort of credited. But then you have the tax component of TDS, which is 1% when you sort of sell it. And the profits that you've made, you will have to sort of pay a 30% tax on the profits when you realize it.
Gaurav, now talking about investing in ETF and a crypto ETF, does it mean that the same way we look at ETF in equity, it's the same kind of way that we're talking about in crypto as well, in terms of value and in terms of investment process, also the kind of benefits an investor looks for in an equity ETF? Is the same kind of benefit we are talking about in crypto ETF as well?
Yes. So crypto ETFs, one thing that we need to sort of understand is crypto ETFs are only in the US currently. They are not in India, right? So Indian investors cannot sort of get an exposure to an ETF by say using an Indian fintech app to sort of take that exposure, they will have to remit money to a brokerage account outside of India to sort of take exposure into the ETF. Vis-a-vis directly spot Bitcoin exposure, like you can have an exposure to Bitcoin buying or selling through exchanges that are centered in sort of India. Spot like Bitcoin ETF, if you want to take an exposure, as long as that does not directly come in India through any sort of financial institution, users currently would need to sort of send money abroad for that. And that sending money abroad is where the LRS rule and the TCS component sort of come in.
Exactly. So, looking at this one more option where investors who were running away or maybe discouraged because of the tax on crypto might just want to try their hands in crypto ETF, what will be your recommendation? Should one actually be going for it? How can they look at? Because there's a lot of buzz, there's a lot of excitement, and a lot of reports saying that now we might just see people coming back to Bitcoin or through Bitcoin ETF only, maybe.
So, like the way to sort of think of an investment thesis around Bitcoin is if sort of things go wrong, like that is an alternate sort of asset class or a monetary network which would still be sort of functioning. So, as you sort of see a lot of conflicts that are happening globally, so Russia, Ukraine, China, Taiwan, or say Israel, Iran, Pakistan, and a lot of these nations sort of fighting amongst each other. Bitcoin is basically a play around if things sort of go wrong, you have an alternative mechanism in terms of monetary transfer or things there. Even if that sort of does not sort of happen, and frankly, that should not sort of happen, Bitcoin still sort of serves as an asset class which is accessible for everyone in 200 different countries in the world, right? So, starting from India, you typically do not take exposure into, say, stocks in Israel or, say, Taiwan or other places where there might be sort of really, really solid companies. But with respect to sort of crypto, it is sort of 200 companies, sort of individuals and institutions looking at one sort of underlying sort of asset in a particular asset class of cryptocurrencies, which is why there is a lot of momentum and the supply on Bitcoin is capped. So you only have a limited set of Bitcoins that eventually would be sort of out there. Taking all this into sort of context, people can sort of allocate a small portion of their portfolio, which so small portion is where sub 10% you can sort of start evaluating, and you can start taking exposure in a systematic form factor. Like, hey, I'm say investing 5,000 rupees or 10,000 rupees on a monthly basis, and then sort of slowly accumulating assets that way. You can take it by buying it through exchanges in India, or you can take the LRS route and sort of take an exposure through a Bitcoin ETF. The benefit with the ETF sort of an exposure is that you have a TCS component, which is lower than the realized profits that you'll sort of have. But at the same time, there is a cap in terms of how much you can invest and what is the value that you can sort of take exposure on. On the other hand, you can sort of take exposure. So if you're sending 100 rupees for a Bitcoin ETF to a brokerage account in the US, you will have 80 rupees because of the 20% TCS component. With that, you will be sort of investing. Versus in Indian exchange, if you're sort of investing 100 rupees, you'll sort of have 100 rupees in your account. With that, you invest, but the tax component post that is higher, where you have a 30% tax on terms of the profits realized.
All right. So apart from Bitcoin, we are also looking at other tokens where we might just have ETFs coming up. Gaurav?
There is a lot of speculation around Ethereum. So Ethereum is the second largest sort of market cap asset in crypto, and now there is already a lot of talks in terms of some of these institutions also filing ETFs around Ethereum. So if an investor has to look at it, ETF is the next sort of beta play. Bitcoin went up significantly from about $15,000 by the end of 2022 to about $40,000 plus. by the end of 23 because of the speculation around the ETF. And now that speculation has shifted gears and it is now happening more around Ethereum because Bitcoin ETFs are already live now.
Okay. Last question to you. What's the new high for Bitcoin according to you? Can anyone actually predict that?
Difficult to sort of predict, but based on the money flow, if you sort of see, as I mentioned in the last 4 days in which ETFs have been operational, more than $600 million worth of new money has sort of come in to purchase Bitcoins through the form of ETFs. And at that sort of a rate, which is like over $150 million a day, the money flow that is sort of coming in, and the circulation of Bitcoin that sort of happens. So every 10 minutes, there are about 6.25 Bitcoins that sort of get generated or mined. So at that sort of a rate, you also have a reasonable prediction in terms of how many Bitcoins would sort of get consumed and what would sort of happen. But most estimates sort of take it to a figure dollar digit number. So it's uh, after in the next sort of 18 months, most of them that have that Bitcoin would cross $100,000 mark.
All right, so let's wait and watch and see what happens. Thank you so much, Gaurav, for being on the show and helping our viewers understand the nitty-gritties of crypto ETF. On that note, let's